Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Maker and its ticker MKR. None of the content is financial advice. Over the last 24 hours, Maker is up by 3.5% over the last 7 days. Also a similar performance just to the downside, about 0.85 negative 0.85 over the last 30 days. If you look at the performance over the last 30 days for Maker, it's still down 9% over the last 90 days. Maker is again negative 14%. That means again only the last 24 hours have been bullish for Maker. Let's check if the price is coming in at some key level. Again, the $1,700 level, $1,775 level is sandwiched between the 21 week exponential moving average and the 20-week simple moving average. The 20-week simple moving average is at an $1,825. The 21-week exponential moving average is $1,750. That means as the exponential average is lower than the simple moving average, that means recent price action has been slightly more bearish than bullish. Again, evidence from this chart in early August 2025. Again, almost 5 weeks ago, the price was at around $2,400. Now it's coming close to the 20-week simple moving average. So let's see how the price behaves in the coming weeks. The major area of resistance over here is not just the 20-week simple moving average, is the 0.23 Fib level at around $1,880. So that range between 1825 to 1880 is area of major resistance from this Fibonacci level drawn from 2021 high at around $6,300 to the 2022-2023 double bottom at around $495. So this particular crypto, again, as it stands, it's a stable coin issuer of the stable coin DAI. And it's one of the more popular cryptos. From cycle to cycle, it has been around since 2017, at least on this on this trading view based chart. And you can see there are some similarities from cycle to cycle, where a peak is established early on and then tries to consolidate into 3 to 4 years worth of sideways movement, and then ultimately a breakout in 2021. And then again rinse and repeat a similar kind of move. And the double bottom over here in 2018, again similar to double bottom in 2022 and 2023, slightly prolonged moves. And then there is again one stark difference is in 2020, when there was a major crash. It was a lower low than the 2018 drops, whereas in 2025 the drop was more of a higher low. So let's see if the rest of the year provides a boost to the upside. The machine learning based price analysis for Maker available on, this is cryptoweeklies.com, link on the bottom of your screen. All the charts for all top 100 cryptos available for free. This is the machine learning based price forecast for Maker in the next 6 months. If there is a non-euphoria bull run peak, again as relates to the end of the year, between $1,860 price action forecast to about $3,500. That's the non-euphoria peak for Maker. The 2024 December high at around $4,000 was a key level to watch. The 0.618 at around $4,100. Let's see if in the remainder of year 2025, if the price action were to go higher than 0.618, then the secondary level is at around $5,000. That's the 0.786. Again, per the non-euphoria bull peak model, the price action could go only as high as about $3,500 if that scenario were to play out. But if the 2 standard deviation extreme euphoria phase were to last till, let's say, end of year 2025, the euphoria ceiling for 2025, if it were to last from now till end of December, is at around $6,900 to be precise, with a ceiling for this week at around 2,100, in October at around 3,100, early November at around $5,000, mid-December, early December at around 6,500. So again, this continued euphoria for 3 to 4 months is hard to achieve for price action. Again, there were only a handful of instances where you could say that kind of euphoria occurred again in December 2020, from December till May, 3 to 4 months. If that kind of were to replicate the price action per the machine learning model trained on the weekly price action since 2017 using seasonal ARIMA XGBoost and LSTM related machine learning model, the euphoria peak is at around $6,900 for Maker. That is slightly higher than the previous all-time high. So a new all-time high is still within the 2 standard deviation confidence level based price forecast for Maker. Where this becomes more key to analysis is the regression based fair value, which is currently having a bullish bias and upwards slope. That's a good thing to have, all things considered. The fair value established by this polynomial regression function is established in this pink color line, currently at around $2,450. That's the fair value. Right now the price action is undervalued per this analysis. Again, whenever the price action comes close proximity to 1 standard deviation residual applied to the fair value, that is this green line over here, prices have in that territory been ideally, again, if you were DCAing only when the prices are 1 standard deviation lower than the fair value, those would be some of the great deals to buy Maker. Again, these models are available for free. They help identify the ideal entry points, or some of the risk based or regression based ideal entry points come a dip buying phase or a bear market for the asset class. So opposite of this is overheated zones, again established by 1 standard deviation residual drawn from the fair value to the upside. Together price stays about 70% or 68% in these yellow and green lines. The upper end of this 1 standard deviation residual is at around $4,100. So that's the non-euphoria bull run scenario for Maker if it were to go and reach that yellow line. The 2 standard deviation, the 95 percentile or the 2 standard deviation residual application on the fair value, the orange line over here, that's where major peaks occur, again like they did back in March 2024 early on, when Maker rallied to close to that 4K level as mentioned earlier, as it did back in March April at 0.618. Again, the December rally was fairly less pronounced for Maker, but again that we have to take in stride. The 2 standard deviation the 2 standard deviation euphoria ceiling for Maker is confluent with that machine learning based price forecast close to $6,900. So that's where the orange line meets the orange line over here in terms of regression based analysis, meets the orange line in terms of the estimated bull run based on the yearly end, based on the euphoria ceiling based orange line for Maker. Coming to the DCA model, again, takes into the consideration the regression based model that we just saw at a weekly level. This is at a daily level, and color codes the price based on the risk levels over here, and with the hypothesis that only to DCA when the risk levels are significantly low. Let's say that level is whenever the risk level are less than 0.2, like they are right now. This model helps identify tune out some noise, helps identify when the price is in very low risk territory. Right now the risk for accumulating Maker is slightly over 10%, or still in the purple color, which is the best time to DCA Maker. Historically speaking, you can see this purple color region is again not an endorsement to buy Maker or anything, but just historical analysis of where the price is with respect to some of the key risk level. If the opposite were to hold true, and let's say as Maker participates in the end of year 2025 rally, and if the risk levels go between 0.3 and 0.6 as they did back in March April 2024, the price forecasted in that environment, the conservative range is between $2,600, and the optimistic range end of the range is at around $4,500. If there is any higher risk-based risk-based price discovery or or risk-based discovery for this bull run. Again, this the latest, the highest that maker went in since, in terms of risk levels, since 2021 was the zero point 0.6 risk level. If it were to go to 0.7 risk level this time around, then that price action could coincide that $5,000 level. That would be confluent with that rally to 0.786. So that's the risk-based estimation of what the price could do as it relates to the regression-based risk. It could theoretically go to 0.786 if the price action were to exhibit 0.7 risk level. It hasn't had that kind of a risk-based journey since 2021. Time weighted average price based risk. Again, this model also did identify undervaluation territory whenever the price went below the blue line. We made several videos related to Maker as the price kind of capitulated below the blue line, especially during the February 2025 dip buying opportunity. Right now, the time weighted average price for Maker comes at around $1,300. Come mid to late 2026, this blue line would be a key line to watch as it relates to an accumulation phase for Maker in the next bear market, potentially as it was since May 2022 till about July 2023, that undervaluation territory, to establish that time weighted average price based undervaluation territory. Again, before then and between then and now, the blue line could have a upswing as the price action grows forward and in positive directionality, like it did back in 2021. That at the start of 2021, the time weighted average price was at, roughly speaking, $600, and as the bear market commenced in 2022, that rose essentially 2x to around $1,200. So let's say the $1,300 today could be at around $2,500 or $2,600 in 2026. Just extrapolating. In terms of the 20-week simple moving average price based risk, again, this models also identify. Again, there are slightly more noise in this data. That means not always this data could on its own predict or identify some of the low risk levels to identify it. It reacts violently to the price swings to the downside as they relate to the difference between the current price and the 20-week simple moving average at any point. But still, nonetheless, it did identify some of the downturns in the market, and when used in confluence with the other risk-based model, they do identify some of the risk-based low risk-based accumulation with some false positives. Right now, the risk levels identified by this model is only 0.2. That means it's the second best time to add a DCA into Maker. If we go by the opposite of this, is between 0.3 and 0.6 risk as the price action. If it were to get overheated, the risk-based price targets for Maker at that 0.3 risk level is around 3K, and the 0.6 is around $4,100. That's the non-euphoria bull run peak for Maker, rally back to 0.618. And again, towards the higher end of that non-euphoria bull run peak is rally to 0.618. The lower end is 0.5 at around 3,500, as mentioned by the machine learning based model. $3,500 level per this model is at around 0.45 risk. And extrapolating or aggregating all of the individual risk-based models, the estimated bull run peak, again, if the max permissible risk level were to be hit, the estimated bull run peak in a really ideal rare alignment of all the risk based model to 0.9 risk for Maker would be around $10,000. That's a really optimistic case scenario for Maker. That's about a 6x from the current price of, roughly speaking, again, $1,800 level. And with that, I would like to conclude by saying, again, these Fib levels as they relate to like their importance as key levels to reach in the short term is the 0.23 Fib level at around $1,880. Once and if the price action were to go beyond that, the 0.382 is where the fair value regression based valuation kind of could meet the 0.382 at around $27,800. The lower end of the non-euphoria bull run peak as it relates to machine learning based models is confluent with that 0.5 level at 3,500, the higher end at around $4,100 level. That's confluent with risk based price analysis using SMA model and the DCA model. The 0.786 is again an area of much confluence, but the most confluent area in terms of a euphoria based price discovery is at around $6,900. With that, I'd like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.